Hello, hello. Yeah, mic check, does it work? Yeah, it works. Perfect. Okay, so very warm welcome from my side to this workshop about tokenizing private companies, especially how to unlock the liquidity premium. If the screen is still alive, yes it is. Not up here, come on. Okay, here we go. So, I will structure this 45 minutes, more or less, into more or less three main blocks. First, we will touch a bit of the legal basis in Switzerland that allows us what we do today in tokenizing shares of Swiss companies. Then I will talk a bit about the solution that we as Aktionariat, as the company, provide. And last but not least, I will demonstrate, so we'll have a live demonstration of tokenizing a share, transferring it, and kind of comparing it to a traditional share transfer. Let's hope Murphy's Law stays at home today, but I think it should work. Short introduction from my side. My name is Béla von Mérey. I'm the Chief Growth Officer of Aktionariat, and very happy to guide you through the next few minutes. So let me start with the regulation in Switzerland. The so-called DLT law, Distributed Ledger Technology Law. Maybe some of you are already familiar with it. However, I would like to give you a brief introduction into that. So it was already in 2016 where this one individual, who is Lucius Meisser, he's the co-founder of our company, he already laid out the advantages of what blockchain could provide to share transfers in Switzerland. So in 2016, still a transfer of a share required a signature, right? So some kind of contractual basis, a buying contract, an accession assignment, whatsoever. He laid out the advantages when using blockchain that we could make that whole administrative hassle obsolete. So make the whole process much more efficient. So this was 2016, and not much long after, so 2019, the whole legislation process started, where Lucius was a part of a trusted team of experts who were allowed to advise the Federal Council as well as the Parliament in Switzerland on this new DLT law. Now, in 2021, the first part was put into force. This was 1st of February 2021. So this allowed, in the Code of Obligations, a new form of shares, so-called registered securities. These had some requirements, and a digital token on a permissionless chain was considered a full share. So it is not like an underlying where a share is floating somewhere around, but the share token becomes the share. The second part was put into force on our national holiday, so 1st of August. This was addressing trading facilities for security tokens. And here at the bottom, what you can see is, so there were 8 abstentions in the parliament, no votes against. So this was, well, perceived quite positively, this change of law. Now, what changed? At first glance, looks exactly the same. So on top, we have a transfer of a traditional share. Let's imagine I have a traditional share. I'm an owner of a private AG in Switzerland, a stock corporation, and I would like to sell my paper to Kostas, our portfolio manager at Aktionariat. So what do I need to do? Well, first of all, most of those shares have limited transferabilities, so you need an additional confirmation of the board of directors to kind of transfer this paper. Now, putting this aside, we need a contract. So I need to sign that I will sell my share to Kostas. Kostas needs to sign this as well. And then the whole registration process starts. So first of all, we have the contracts. Then Kostas needs to go to the issuer saying, guys, I am the new shareholder of your company, so I want to be in your share registry, right? So he has to make sure that his data is in the share registry of the company. Now in Switzerland, up to 25% of ownership, the company does not need to know who their shareholders are, but it is in the incentive of the shareholder himself, because if he doesn't make sure that he's in the share registry, he loses his shareholders' rights. So. Sorry, good. Now we compare that to blockchain shares. What happens with tokenized shares? I have a share, same company, but this is tokenized now. And I want to sell it to Kostas. So he can send me money, I can send him the token. All I need is his wallet address. This is a sequence of numbers. I can add it into my phone, into my wallet, and I can send the share. That's how it's done. Very easily, and that's something we will demonstrate later on. No contract needed, no signatures needed. This is all covered by the new DLT law. So I can send him a share in a matter of 10, 20 seconds, and it is full legally compliant. Now, the registration process with our app, for example, we have shareholders' information attached. So if I send this share to, for example, Kostas, who has his shareholders' information as well in the app, the issuer will automatically see in his transfers tab that this share was transferred from Béla to Kostas. The share registry will automatically be updated, so he will have the new shareholder will be in there. And this also has the advantages of, if he's moving around, he can change his address, always automatically updated. So we see that we have a much more efficient process with tokenized shares, especially in the sense of transferability. Now, difference, traditional systems, finance systems, and decentralized finance systems. I will only touch this very on a high layer. However, I wanted to talk about it quickly. So if we look at TradFi, that's how we like to call it, traditional finance, it is a very closed system, right? So we have intermediaries. Decentralized finance systems, we can see it is distributed, it is open. Now, what is one of the main distinctions? It is that agreements in the traditional system, they are enforced through intermediaries, right? They make sure that the transfer is successful, that everything is correct. In the decentralized system, in DeFi, the agreements are enforced by code. So we kind of make the intermediaries obsolete. Now, the transactions themselves are done quite securely, if we look in the traditional system, but very in an opaque way. So we do not see behind the walls. Probably some people, maybe also in this room, would have liked to see behind some walls of some banks, Swiss banks in recent history. If we look at the DeFi system, it is as well very secure, but transparent. So I will demonstrate that later on as well. So we can check every transaction on Etherscan. You can see everybody, visible for everybody. You do not see, of course, you do not see the information, the personalized information, so you do not see that it was my share, but you can see that a share transfer happened from wallet address XYZ to wallet address XYZ. So how does that help when we talk about private companies in Switzerland and the whole tokenization process? In Switzerland, we have this rather maybe special circumstance that we have around 112,000 stock corporations, and less than 1% of those 112,000 stock corporations are listed on an exchange. So the rest is privately held. Now, if we look at those private companies, who are the investors? Private equity, funds, venture capitalists, business angels. But we talk about a rather exclusive investment environment. If we talk about secondary markets, most of them are just illiquid, 100% illiquid. And if we talk about valuations, yes, it's hard to price. Private markets, very hard to price, so it's always based on discussions, forecasts, and so on. So that's where the technology can support. So we would like to change or transform this private equity space into something we call open equity. How do we want to do that? We want to create access to those companies, right? Everybody should invest in the company they like to invest, of which they're customers of. We increase liquidity on the secondary market. We do not solve the liquidity market to 100%, of course, but we increase liquidity to compared to the traditional system. How we do that, I will talk about that in a second. Valuations, valuations are driven by demand, so you have much more signals from the market than just the entrepreneur making some forecasts. So when we thought about how do we want to structure secondary markets for tokenized shares, the liquidity is an issue, right? Liquidity is crucial, but. So this is maybe a bit small for some of you, but this is the order book of NZZ, so Neue Zürcher Zeitung. SME, not that small. And if we look at the spreads, we can see spreads up to almost 10%. So we have these bid-ask spreads. Market makers are too expensive for SMEs, for smaller companies. So what can we do about this missing liquidity and kind of facilitating secondary market trades? We looked at, or our founders got inspired by Uniswap. Uniswap, one of the largest, if not the largest, decentralized exchange there is out there. They use something which is called the liquidity pool, liquidity pools. So we kind of copied that idea and said, okay, why not use two buckets? On one bucket, so our company's clients, when they tokenize shares, you can imagine, they start filling up the tokenized shares bucket, and the crypto bucket is empty. Now they start selling the shares, right? So the shares go out of the treasury of the company to the public. So the crypto bucket increases. So we use stable coins there. We use the crypto franc, which is a cryptocurrency which always has the same value as the Swiss franc. So this is asset-backed. There are a few million crypto francs stored in a Swiss bank account. So asset-backed stablecoin. And now, as you can imagine, we recommend the companies to keep around 10% of liquidity, which they raise through the selling of their shares, in one liquidity pool, in the crypto pool. So they start selling the shares. And if an investor would like to sell, or a shareholder would like to sell his share again, he can sell it back to the company as long as there is crypto in the other bucket. So this as a short explanation of this secondary market approach. Now with this solution, the tokenizing of shares, we enable mainly 4 use cases. First of which is we are a tech provider. So we give companies a legal and a tech framework with which they can decide whenever they want to open the market, when they want to sell shares. So compared to like traditional crowdfundings, it's not like that you would raise for 30 days and you close the market and you do another round in a year or in 2. No, the company can freely decide whenever they want to open the market, whenever they would like to sell their shares. Second point, stakeholder engagement kind of goes into the first one as well. So we allow companies to sell their shares directly over their own website, which facilitates the access. They can approach clients, partners, and all the stakeholders they have to become shareholders, right? So some of you may know Farmy, for example. Farmy, one of the, I think it's the 3rd largest nutrition delivery service in Switzerland. And well, they have reached out to their community. They have sold their shares over their website. And they were able to raise a bit over 4 million within a week, which was a quite successful round for them. Third topic, employee participation. So as you can imagine, with the whole share transferability, and as soon as you tokenize it, you can, of course, increase the efficiency in employee participation plans as well. And the last point, strategic independence, addresses the situation where an entrepreneur has maybe a successful SME in Switzerland, and he doesn't want to sell his whole company, but he wants to sell a few percentages of his stake. So he can pull out a bit of liquidity using tokenization, selling it over their own website, and therefore, gain liquidity without being pushed towards an exit. So that's what we do. We bridge companies and investors. We create this bridge. We ourselves are not a financial intermediary, so we do not touch the money of investors. We do not have shares of the companies with us. It's always just the facilitating of the direct transfer between the companies and the investors. Now, what you can see here, this is the heart of Aktionariat. Here on the side, you can see our broker bot. So it looks very much like a traditional trading tool bot. We place that on the website of an issuer. So the issuer creates an investor relations page. Could be compared to companies that are listed on a centralized exchange. And this page has 2 goals, right? One goal is to create trust, be transparent. And the other goal is to facilitate or provide an entry door to the investment directly. So you can see that you can choose how many shares you would like to buy. You can see that you have multiple choices of payment methods, and you can start buying the shares directly on the website. As I mentioned before, these are always treasury shares. So we create the shares beforehand, the company creates it beforehand, and then they take it into treasury and then sell it out to the public. One additional thing that I would like to mention here as well is that we have a drag-along functionality inserted into the token. So every shareholder, no, not every shareholder, but every entrepreneur wants to be sure that he can sell his company when he wants to, right? So we have shareholders' agreements, of course. In this shareholders' agreement, we have defined a key decision quorum. So the key decision quorum of ownership, which is needed to make the decision to sell the company and squeeze out minority shareholders. Now, this is not something new, right? Most of the startups, they do have a drag-along clause. But what is new here is that we have put that into the tokens, the functionality, which means there will be a voting on the blockchain if the company should be sold. And if the voting is successful, or the votes, the key decision quorum is reached with yes votes, then the tokens are automatically pulled out of all the wallets. Doesn't matter where the share token is stored. They can pull it out, and therefore the entrepreneur can be 100% certain that he can sell the company whenever he wants, as long, of course, he still holds this key decision quorum. Now, been talking about treasury shares now. I've mentioned it a few times. Switzerland, we have a special requirement, or a requirement, that a company should not hold more than 10% of treasury shares, not to run into any withholding tax consequences, for example. That's why we work in batches. So we create the treasury share of batches, 10%, the company can sell it to the public, and as soon as they have sold it, they can create another 10%. With Aktionariat, our company, this was the first company we tokenized, so we tokenized our shares first to see if everything works. And we start selling them, and currently we're on our third batch of the 10%, so this works pretty well. Valuations. How are the companies, what is the value of those companies? How do they start? Well, the valuation is up to the company at first hand, but part of the onboarding process is talking to a due diligence provider, so they will have to justify their valuation. It is a plausibility report that the companies need to go through. So this is the starting price, the starting valuation, where they start. Now, we have also thought about, how can we kind of imitate stock market prices? What is stock market price based on? It's based on, well, offering, demand. So we introduced a function which is defining a price increment. Now, a company can define a price increment, which means with every share that they sell through the broker bot, the market price increases by this price increment. So this means the more shares that you sell, the higher the valuation gets and the more expensive the share is. Now, this works perfectly fine as long as there are shares to be sold and liquidity to buy back the shares. So there, over time, you will reach market equilibrium. Now, as a brief outlook from Aktionariat's perspective, what we are working on currently is, of course, the ease of use. I think like every company in the Web3 space, it is very important to make it as easy as possible to use our solution, to use any solution in the blockchain space, and we're working on scalability. Now, one important factor is the whole TradFi integration, traditional finance integration. So, for example, today, if you hold shares, tokenized shares, we have a self-custody wallet, right? So you yourself are responsible for your share. Nobody else is able to take that away from you, to restore it. You are the one in charge. Now, some people don't like this idea. Some people would like to, especially if you hold, a rather a larger value of tokens or shares, they would like to give that responsibility out. There we have, for example, a partnership with SDX, or also with Hypothekarbank Lenzburg, where investors are completely free to hand out the tokens, give it to the bank, and they will store it for them. Now, okay, so we come to a bit more interactive part. We talked about traditional shares quickly, and I would like to demonstrate how can this be distinguished, a share transfer of a traditional share to a blockchain share. So for this, I will switch into our dashboard. And we're talking about traditional shares now first. Okay. So, oh, this is very small. When a company starts onboarding, everybody gets something which is called a dashboard. So you have an overview page here. This is our example company. Now, well, the first thing you do is you have here the share registry. So you fill out your share registry. Who are your shareholders? What do they hold? Now I will add a record, and say, okay, so Béla has now, let's say, 1,000 shares. Okay? So I will hand out myself 1,000 shares of this example company. I'm already here in this list, as I have been registered before. You can also add a new shareholder. So this whole functionality can be used by everybody. This is free to use. This is the digital shareholder registry. I will now enter myself. Okay. Add a record. And now if we look in the share registry, I should be in there. Yes, Béla is in there. Am I OVP? Yes. Okay, perfect. So, entered in the share registry. So now I can download the app as also a traditional shareholder. I can register. Quickly synchronize my screen. That works. Yes? Okay. So here, I'm in the profile section. This is all the information that you need to fill out if you use the app. So, well, yeah, this is my private address, so please don't share it. And now I can check the portfolio. Okay, so I should have some shares of this OEP example company, right? So here we are. What you can see here is I have non-tokenized shares. And now I would like to send those shares to, for example, Costas. Okay? How can I do it? Well, I cannot do it just like that, right? Because we need a written contract. Now I would need to fill out the contract. I would need to inform the issuer. Let's say we do that. Okay, I have a signed contract. You have a signed contract. Then I will call up the company, say, guys, I have transferred those shares to Mr. Costas. Right? I can't see manuals here. Here we go. Okay. So the company has to go into the book manually, put in the transfer, say, okay, 10 shares have been sent from Béla to Costas. Okay, so I can add the record. And then the shares are transferred. Now, with a traditional transfer, quickly refresh. Here you can see the transfer. Here you can see a note, which is a bit small, I have to zoom in. Traditional transfer by written agreement declaration. So this is needed. Now this is in the share registry, everything works out fine. Okay, but there was some manual efforts in there as well. What you can also do using our app, and let me quickly switch back, is I can send a tokenization request to the company. Now I want to tokenize those shares that I own of this example company, right? So let me quickly share my app view again, jumping around in screens here. Okay. So I go to request tokenization. So now I have sent 10 or 11 shares to Costas. And now I want to tokenize those shares, okay? So I can say, okay, you currently have 989 shares that can be tokenized. So let's go with, I want to tokenize 900 shares. I don't want to have this hassle of signing all these buying contracts. and I click on request. Request has been sent. Now what happens? The request was sent to the company. I will switch back so you guys can see that. What we can see here is it will pop up in the proposals. So the company will receive a message, a notification saying, guys, Béla, the shareholder, he wants to tokenize his shares. Okay, so let's do that. Me as a management position with signatory power, of course, can sign this proposal. I will do that now. And I will tokenize those shares of shareholder Béla. I can scan the QR code, I can confirm it, and this will lead to the tokenization of my share. So what we can see here, we have tokenized the share, right? Now, as I said, as we are using public blockchains here on Optimism, you can see, you can even check the transaction. So you can go on Optimistic Etherscan. You see that I actually really did tokenize this share now, so this token exists. And now, well, the whole transfer does look a bit different, right? Now I can send around this token without any further agreements needed. So let's jump for the last time back to the app. Not yet working. Come on, come on. Okay. So now again, I go back to this position of the optimistic example log A. And now what you can see, well, positions, I have a token here. I have a token. I have 900 OEPS, which are tokenized. Now again, I would like to sell those shares, send it to, for example, Kostas. In the beginning, I said the only thing I need now is, well, I need his wallet address, right? And then I can send it, and it is fully legally compliant, and he will be automatically in the share registry. If I want to send it now, I can choose to whom I want to send it. It's an external address. And now the easiest way to send it is, Kostas already has it ready. I will quickly show it. You can check also on your own phone. It's on the connect button. Here, this is my address, right? Here on top. This is a bit long, and it's a bit a hassle to enter it manually. So you can always click on QR codes. Kostas has already opened his QR code. So what we do is I go back, I go to the share I want to send, click on the position, send those OEPS to an external address, and now I click here on the QR code, which opens up the camera. I will have his address inserted. I will click on max 900 shares, and now I would like to send it. So this costs me now a transaction cost, a gas fee of 0.9 Swiss francs. This is a bit lower than on the Ethereum mainnet, so we use Optimism now for demonstration purposes, as the gas fees on Ethereum are piking a bit at the moment, but this is a very well solution which works perfectly as well. Okay, transaction signed and sent successfully. So what happened now? I'm out of the share registry. I will quickly go back to the dashboard and show you what the issuer can see, right? The issuer, here we go. First, you can see that, well, yeah, Béla minted his tokens. And then sometimes it takes 30 seconds to a minute. And then you can see the transfer from Béla to Konstantinos. Here we go. So it's in the transfers list. You can see that. And the share registry is automatically updated. So if I go into the share registry, we can see that. So this is how, you can increase efficiency in share transfers. And now, as a last demonstration, I will quickly show how the investing part works. So, as an example, you can see here a companies list that you can invest in, right? These are our companies that we have tokenized. And now we could choose, for example, let's quickly go for Carnot, which is an e-cigarette. Now, how does the investment process look? Well, okay, as they sell tobacco, I will say yes, I am over 18, that's fine. This is their, okay, where's the investors page? Do they actually have an open investors page? I don't know. Is it /investors? Discuss those. Otherwise, we'll use our own. No. Okay, no worries. So, we of course use our solution ourselves as well. So how would that look? Here we have the broker bot that we have talked about. And I would like to buy some shares. Let's say with bank transfer. So I would say, okay, I would like to buy 1,000 shares. I can connect it to my Aktionariat's wallet. I will open up my wallet. I will just click on, again, scan QR code. I will connect it to my wallet. Connected, and I can proceed the investment process. Here, I can quickly double check my shareholders' information. I can proceed, I have some investment terms. And if I click here on request payment instructions, I will get an email with the bank information of the company. And as soon as I send the funds to the company, they can confirm that they have received it, and I will get the share. If I do it with crypto, of course, you have an instant settlement. You will receive the shares straight away. Yes, so this was a short introduction into tokenizing private equity, how we try to solve liquidity issues on secondary markets. So very happy to answer some questions that might have come up during the presentations, or rather general questions. Floor is yours, if there are some. Yes.
Béla, thanks for a very good presentation. When you showed us the list of all the companies where we could buy shares in,
yes,
right? You went to this tobacco company. How long is that list? And are all those companies offering treasury stock either just created or on a subsequent round? Is that the question? Is that right?
Yeah. So we have currently, I think, 35 companies tokenized, which are traded at the moment. So you can buy shares from. Some are maybe just in between a capital increase, so they might have some closed markets, but most of them are trading at the moment. And yes, so the shares that you buy, they're always pre-emission shares, treasury, they lie in the treasury at the moment, and they are sold over the broker bot. Now, of course, these can be treasury shares that maybe have been bought back in between, because they provide liquidity to buy back, and then they sell it to a third party. But most of them are pre-emissioned, signed shares, and then they sell it. Does this answer your question? Yeah? Okay, perfect.
Thank you for the good presentation. I would have two questions. The first one is, as you transfer your shares from your portfolio to yours, Kostas, you transferred 900 shares, or
correct.
Token representing 900.
Correct.
If you would like to only transfer 400, would it be possible?
Only 400. Yeah, you can choose how many shares you would like to transfer. You can transfer one share. The only limitation you have from a legal perspective is that one token always represents one share. But this doesn't impact the transfer possibilities of the share, yes.
Mm-hmm. And then issuing, from a company perspective, issuing shares, meaning you might as well be able to issue shares in form of normal certificate, register shares, and as well token. So the both form of share certificate, or can you, at the end, would it be possible to retransfer them into normal share certificate and back and forth?
Exactly. So, I mean, this is generally a legal question, as It is just a different form of the share, right? So if a company tokenizes shares and they maybe want to move back into traditional shares, we have a functionality of burning the shares, so we can burn them completely, and officially they can be restructured into Namensaktien or Inhaber-Aktien. Yes.
And sorry, the last one.
Of course.
In Switzerland, you have a lot of restriction on shares, maybe so-called Vinkulierungsklausel and so on. Is it possible to put that on the blockchain as well, so on the contract, kind of restriction that the company might have in terms of transferability?
Yes, absolutely. So we have a functionality which we call allow listing, whitelisting. So this allows a company to also deny a transfer or a shareholder, right? So on a technical layer, what happens is if somebody would like to buy shares, they can request access. So we also had some companies which are a collective investment scheme, so they're only allowed to onboard qualified investors, right? So they need to have this additional check mark. So what they do is, or we implement an additional barrier where the investors need to request, and then they send in IDs or proof of disqualification, and then they can identify their wallet address, and they can, on the smart contract, they can allow for this address to buy shares. Now, this also kind of closes the environment, so this shareholder can only send his shares to another address which is whitelisted. So this is how we kind of can restrict the handling of those shares and create a hurdle for new investors to join the company. That's how we do it.
Hi, Béla.
Yes, hi.
Thank you for the nice presentation. Murphy
you.
was indeed very kind today. I have more than one question. One is about the liquidity. Is there some kind of an obligation that company buys the shares back? So I agree that Farmi, in your example, created the shares, tokenized it, created it, and then let's say I as an investor want to get out. How do I find a counterparty, especially if Farmi is not ready to
buy back shares?
Yes.
Very good question. So I will quickly show you the list again. First of all, to answer your first question, there is no obligation to buy back shares. So the company is completely free to decide if they would like to provide liquidity or not. It is the recommendation that we give, and we also demonstrate on our website the liquidity which is provided in the pool that I've talked about, the crypto pool. So what you can see here, for example, Boss Info, they have now in the liquidity pool crypto francs in worth of almost 350,000. So if you're a shareholder there, you could now instantly sell for 348,000 Swiss francs. If the company does not provide liquidity, yes, you are kind of back to the illiquid secondary market that we have already, right? We are there working on an additional solution, as we have also witnessed situations where companies still sell shares, they sell more shares, and maybe they have onboarded, shareholders 6 months beforehand, and they might have shareholders which would prefer to sell their shares as well, right? So some kind of additional secondary market opportunities could very much make sense. So we are working on in a decentralized way, giving out possibilities for those shareholders to sell their shares to a new investor. This is in the making, so stay tuned, and we should, I would say Q2, end Q2, beginning of Q3, we should see the rollout of this.
Got it, thank you. My next question is, when the treasury shares were issued and I as an investor would want to buy, I buy it against cash or Ethereum or whatever. But the transfer transfer example you said, it did not seem to happen against cash, or meaning it was just you showed a QR code being scanned on Gusta's phone and you showed that.
The transfer of the share, you mean?
Yeah, the shares got transferred from
my wallet to Costa's
one investor
wallet.
to another. Where was the money leg?
Yeah, so the transaction cost, you mean?
No, not literally. You didn't transfer it to him for free.
Yes. Okay, now I got your question. So, until we have not rolled out the secondary market that I've been talking about now, just a second ago, this has to be done bilaterally. Okay, so you are completely free. This happens probably only in cases where you trust the buying party. So if I want to sell a token to my neighbor or to my brother, I can of course do it because I know he will transfer me the money beforehand and then I will sell it. This is again, the question about intermediaries that we're kind of trying to block out, right? In the secondary market that we are looking at, we can enforce it by smart contracts because the exchange will only happen with crypto stablecoins, right? So there we are sure that we can make sure that the smart contract can make sure that there is money, there are the shares, and these two things can be changed. Yeah.
Thank you. And sorry, one last question. There are a few players in the market offering similar services. So how are you able to stand out? What would be the value proposition?
Yeah. So I think one of our core competences is especially within our founders. So our two founders come from the tech side. They come from the DeFi industry. And some of our competitors rather have developed out of the corporate structure. So our core strength is literally the tech. We have tech. We do everything in-house. We have our blockchain engineer here. So if any more tech questions come up, I have the master here as well. This is one of our core strengths. And another one is that, well, the decision that we made when we started with the whole solution is to go with permissionless chains, right? So we started with Ethereum. Other providers started using permission chains, private chains. And now they are starting to realize that maybe they should or some have to change to public chains. And this brings quite some burdens. And the good thing is that we have now experience with 2 years, so we know where the hurdles and problems lie, and we're trying to tackle that every day and make it easier for our users to get through it. Another thing is, well, one last point I would like to mention is the ease of investing in private companies. So best way is try it yourself, but you can download the app, you provide us 5 lines of data, and you're ready to invest. I would hardly challenge, or I would challenge you to find another solution where you can onboard as an investor within 30 seconds to a minute and start investing. So it's a very, very lightweight on the investor side especially. Yes, I think there is, yep.
Thanks, Béla, for the presentation. 2 short questions. First one is, how is it made sure that the communication from the company on a legal basis is properly made sure? So how are shareholders notified, for example, invitation to an AGM? So that's first question. Second question is, and you touched upon it a little bit on share buybacks and capital increases. Let's say company transactions such as paying out of dividends, stock splits, etc., can the system cope with that as well?
Yes, absolutely. So, to your first question, how are our shareholders notified? So currently what we have, or what we do is, we have the digital share registry with all the information of the shareholders, right? So what every company can do very easily is export all the email addresses. So most of our clients, they invite to an AGM, just exporting the email list, sending out the invitations. There we are also, this is also in progress, which will come very, very soon, and I'm excited about it. We will introduce voting opportunities. So you will, as a shareholder, receive a link for the AGM, the General Assembly, and you will be able to provide your votes straight there on the URL. From a communications perspective, we have seen that our clients do it very differently. As there is no further obligation of, let's say, quarterly reports or things that you need to send out, we find that, well, the investors community very much appreciates a very transparent communication. So some of our clients literally inform a lot. They send out newsletters, they send out updates about the company to the shareholders just using this export function. But this is, the whole governance topic is something that we're also tackling at the moment, and we're enhancing that on a daily basis. This was the first question. Second question was corporate actions. Exactly, dividends. So let me quickly touch the basis on dividends. We actually have a company that has used a functionality, which is basically from a technical layer, an airdrop functionality. So you can send out tokens to addresses, to different addresses, or to your shareholders. And one of the companies, they actually distributed their dividends in crypto francs, so the stablecoin to the Swiss franc. And well, this was done. You can upload an Excel list. You have all the wallet addresses. You can define how much you would like to distribute, and you pull it through with a few transactions, and the money is distributed. So this works perfectly fine. This can be done like this with using stablecoins. Exactly. Dividends, and the second one, there was another. Stock splits, yeah. Yeah, so I mean, with the stock splits, you can let me put it that way. The smart contracts are quite flexible, so we can change from names to. We actually have just a company now. They have a renaming of the company, so they also want to rename the share. Now, I also had to ask our engineers, I was like, is that actually possible? Yeah, it's not a problem. So we can create a lot of custom proposals, interacting with a smart contract and doing some adaptations there. If we talk about share splits, for example, this is a decision that mostly is taken beforehand, especially if you think about handing out shares to a broader mass. It makes sense to have smaller ticket sizes or smaller nominal values of shares. Some of the companies have already done a share split before, then we start tokenizing and hand it out. And otherwise, you could just mint more tokens and distribute it. So there's always a possibility to act with or to fulfill the corporate action need. Yeah, exactly. Any further questions? Oh, yes.
Hi, just a small detail. You mentioned optimism.
Yes.
And that it was cheaper than Ethereum.
Yes.
Because of the gas fees
yes,
were cheaper. What is optimism, and is it a subset, or I just first time I heard about it now.
Okay, so I think for that question, I have a much more qualified. I mean, I could answer it, but as I have our blockchain engineer here, maybe you can tackle that question directly. Thank you, Bernhard.
Yeah. So as there is a general blockchain trilemma about decentralization, scalability, and security. Like the traditional chains like Bitcoin or Ethereum have a big problem with scalability to fulfill still their decentralization and security. Ethereum went the way for scalability to have like layer 2 solutions on top of the base layer for Ethereum. And they are mostly roll-ups, like they batch transaction together and then roll up them as one transaction on the main chain. And this kind of subsidizes and makes one single transaction on the roll-up on the layer 2 far cheaper than. You're welcome.
Thanks, Bernhard. One more question? Okay, go ahead. Oh yeah, you have another?
Yeah, sorry.
No
really
worries.
quick, what is the nature of your partnership with SDX, if you have one, given that they're a private permission chain, or at least that's what I've understood they operate?
Yes. So the question was what our partnership is in.
Yeah.
Yeah. So what we have currently, what we are offering today is the custody. So what they can do is they can take over the custody of investors. So you can send your tokenized shares to SDX, and they will make sure to store it safely, and you have one responsible party basically taking care of it. Now, with the private chain and well, the Swiss Digital Exchange that they're building, what we are looking at the moment is also for our clients that if we go there, that we have an exchange of tokenized securities and equities, that our clients will also have the opportunity to participate in that. So there are different solutions that we are talking about currently. So either it's going to be that we will send the tokens to their address where they will be stored, and they will hand it out newly on a different chain.
So they are able to receive tokens on a public chain and then store them.
That's what they already can today.
Okay. Yeah. And last one, just general question on compliance, regulations, etc. Because, of course, we've seen the example of a transaction that's been handled by your platform, but it's just a token on a public blockchain.
Correct.
So I could essentially send those tokens to any address, any wallet, without using your platform, without knowing who is behind. So I might have an investor, I don't know, in a sanctioned jurisdiction or something like that. Just any comments that you might have on that.
Correct, yes. So this is, yes, a good question, also something that we've been thinking about quite a lot. So what we do is, especially in the initial round when the shares are sold, we have a lot of disclaimers. But in the end of the day, it's a decentralized world, so the tokens can be transferred to somebody who theoretically is sanctioned. There, how should I put it? The company itself has the opportunity, introducing an allow listing, for example. There, of course, they can be 100% certain that nobody else touches the token that they do not know of. On the other hand, we have had one example where a share token has been sent to somebody who provided his correct shareholders' information, and he was in a sanctioned country, so the company got in contact with him. He explained the situation, and he sent back the token. Yeah. So it worked out pretty fine in the end of the day. But of course, yes, this is an additional fact that probably only like chain IDs or like identification on the blockchain will solve in the future. But yeah, we are working with all the contracts, the shareholders' agreements, and the disclaimers, and that's at the moment the most that we can do about it. Yeah. Thank you. Yes.
Béla,
Sorry. Yes.
You mentioned that there's 112,000 companies, 99 of which are not traded on a
correct. Centralized exchange.
Obviously, there's a lot of lemons out there. There's a lot of bad companies. How selective are you in terms of the companies that are allowed to use your platform to raise capital?
Yes.
There's a reputational issue for you, isn't there?
Yes. That's a great question, because we have discussed this a lot of times internally when we started. So we position ourselves as a tech provider and not kind of a venture structure that we want to look into the businesses and decide if this is a good or a bad company. What we want to do, and what we think is our obligation, is to make sure that those companies are not founded by somebody who is sanctioned or was sanctioned before. So all of our clients go through this plausibility check. Now, this plausibility check is done by a third party. It's BV4. So they look at a lot of startups. They look at the valuation. But that's not the only thing they look at. We check all the founders as well as the board members on Refinitiv, so World Check, so we can see if there is any ongoing investigations. That's how we really try to at least keep people or companies away that might have bad intentions. But in the end of the day, we do not select if it is a good company. We just want to make sure that it's a clean company. That's how we do the selection process. And then we let the market, well, speak for itself. If they're able to find investors, they should be able to use our solution. Yes. Any more questions? We're good. Oh, yes, there's one. Oh, no, there was just clapping. Okay, perfect. Thank you very much. Thank you.